People are talking about a big bounce back for the Indian economy. Does this crisis, though, mean in some ways that, we have more credence given to this oft-stated adage that India's got a great future, and in 10 years' time, it'll still have a great future?
I think that's certainly the case. As you know, I'm very bullish on India. In fact, in our fund, the largest allocation is India. And I'm frankly surprised that despite this terrible news about the COVID secondary outbreak, our stocks in that market are doing quite well. Now, there's no guarantee, whenever you have this kind of bad news, it will affect the psychology of the market. You might see some decline, but generally speaking, India is on a run. And despite this problem, and I think, of course, it will be temporary, more and more people will be vaccinated, and the death rate will decline. Nevertheless, there is an impact, and we can expect some correction, but not a big one.
And Mark, looking at the places where you're investing in India, I'm sure that coronavirus, as it has done elsewhere, has really accelerated some of the trends out there. For instance, people are now talking about ed tech, for one thing, worth about $30 billion in just 3 or 4 years from now in the country. What are you looking at?
We're looking at, first of all, medical testing in particular, which is doing quite well, partly because of corona, but partly because of the general increase in awareness of health measures and that sort of thing. So medical testing is one area. And basic infrastructure, companies that produce pipes and tubes and things like that, which go into home construction and infrastructure generally, they're doing very well. And the education sector is another area that we're critically interested in. And that, of course, that's true globally, but in India as well. So those are the areas that we're looking at and focusing on.
How about Indian financials, Mark? I mean, the government has been cleaning up the asset quality. Are they beginning to look attractive?
We've stayed away from financials generally for obvious reasons. There's been a lot of defaulting, lots of bad loans. And, the problem in the banking sector, and not only in India but globally, is you really don't know what's there because a lot of it isn't. You won't see the banks admitting to the total amount of bad loans they have. And they even don't know themselves because defaults come and they are often not aware that they're coming. So we're staying away from the financial sector generally.
Let's talk about the bad loans. India's bad loan ratio, the highest in the world, $800 million of defaults so far, and more is expected. Will that weigh on the Indian market?
No, I don't think so. And if it would have weighed, you would have seen it in the market. Of course, as you can see, the market is doing very, very well. So a lot of the money that's coming into India is not only foreign money, but local money that is not involved in the banking sector at all and is being produced domestically by domestic profits in other industries. So I believe that it's not going to weigh on the market in any great degree. And don't forget, now that the news is out about all the bad loans in India, then the news is there and everybody knows about it, and we can expect an improvement in the whole situation in the banking sector going forward.
Mark, we know that the Indian government wants to implement its privatization plan, which could get derailed because of the second wave of virus. What opportunities do you see there?
I think it's an incredible good thing that India is embarking on that. Now, you cannot expect very much because it's going to be an incredible bureaucratic resistance to this privatization. But the mere fact that Modi has embarked on this is an incredible beneficial thing to the Indian market because it means that we're going to see a lot more liquidity, a lot more opportunities with more and more companies being listed, government companies being listed. So we don't expect, a big revolutionary change, but this change is going to come gradually, but it's going to be very beneficial to the market.
Mark, you invest all over the world, emerging market-wise. For you, who's the star performer in the future, and where are you investing in particular in order to maximize your gains?
Well, one of the great things that we have invested in is on the semiconductor area, particularly in Taiwan, to some degree in Korea. The fabless companies that do the software and designing for semiconductors have been doing very, very well. Of course, there's this shortage of semiconductors, but I think even without the shortage, they would have done very, very well. And that's one area we're in. Generally speaking, we're looking at technology, but the hardware and the software both. But particularly on the software side, that's where we see great opportunities globally, but particularly in Asia.
Mark, you said of the Biden-Harris ticket that if they won it, they would be a disaster for both the stock market and indeed the economy. Now, the S&P is up, 19% since the election, up 9% since the inauguration. The thing is that if America's economy starts to in any way kind of fail, well, it does affect the emerging markets, certainly, does it not? So how do you respond to all that?
Well, one of the things that I didn't expect was the degree to which Biden would embark on this incredible spending program. And it turns out that this has been quite beneficial, not only to the American market, but also to markets globally, because, with big spending in America, it means that the U.S. will be importing more and more, and there'll be great opportunities for exports from the emerging markets, and not only China, but exports from all over the world, including India. So this is some area that I didn't expect, and of course it's been quite beneficial. Going forward, I think the real problem we have is the currency, the digital currency problem. Right now, as you know, there's a big craze about cryptocurrencies, and I'm afraid that there's a wealth effect we're seeing as a result of this. And if these cryptocurrencies decline, particularly Bitcoin, it could be a problem for the market. So we have to watch that carefully.
Mark, EMs tend to take the cue from China. So far, earnings have been pretty positive, yet the markets have been trading sideways. What kind of catalyst do you think is needed for China to pick up again?
I think the big catalyst for China will be relationships with the U.S., which I think under the Biden administration will probably get better than they were with Trump, although it looks like Biden is continuing some of the Trump policies. But generally speaking, I think the relationship between China and the U.S. should get better, and that will have a beneficial effect on China. But you must remember that, as you know, a record number of Chinese companies are being listed in the U.S. market. So that means the relationships, commercial, financial relationships, are still very good and actually are getting better, at least on the financial side.